Everyone's freaking out about all the rules that are changing in the real estate community. I'm going to tell you what's happening with the lawsuit and how it affects sellers, buyers, and affects their agents and what agents can do to protect themselves. I'm going to break everything down in a very easy to solve manner. At the end, I'm going to be showing you what you should be saying to a buyer in regards to compensation. The National Association of Realtors has settled in a lawsuit. What does that mean? I'm going to break this down right now. After negotiating for years, the Stettler-Burnett case has come to a settlement. So if you're a real estate agent, especially a buyer's agent, now what? I'm seeing a lot of negative news about this settlement. Many of the people writing about it don't have a clue about what the settlement means. Much of what they're saying is based off scarcity and fear, and most of it is just plain wrong. And it's easy to freak out when things are changing, and things are always changing. So chill out and relax. I've been in the real estate industry for a few years now, and I've been a full-time active agent the entire time, and I've represented quite a few sellers. I've seen it all, so I'm talking to you about this as an expert. I'm willing to clarify what actually is happening right now and what it means to sellers, what it means to buyers, and what it means to both buyer and seller agents. And I also want to show you how it affects the global economy and professionals who support the industry. Now, I'm also going to say what you need to do about it. I will not be talking specifically about commissions due to the antitrust laws. In the real estate industry, antitrust laws prohibit discussing commissions directly between realtors. These laws are designed to actually promote a fair compensation and prevent price fixing. When agents discuss commissions directly, it can be interpreted as an attempt to set standard rates across the industry, which is not good. So here's the basics of the lawsuit and the settlement. The bottom line, the National Association of Realtors, or NAR, was in a legal battle defending practices that had long been basic in real estate transactions. The lawsuit challenged certain approaches to broker compensation. The proposed settlement modifies these practices. The National Association of Realtors has agreed to the settlement, but it still has not been approved by the courts. What's fascinating is that the lawsuit was actually brought against a multiple listing service rule called the Corporative Compensation Model Rule. The MLS Model Rule was introduced in the 1990s by consumer protection advocates to protect buyers and buyers' representation. And now they're really against it. It seems a bit counterintuitive to me, but hey, there's money involved and some very greedy people must see opportunity. So here we are, the sharks are coming out. What's next? What you need to know is that NAR did not admit any wrongdoing in connection with MLS Model Rule. Some agents are up in arms that the NAR didn't fight harder, but we aren't attorneys and we weren't in the room. NAR is the largest trade association in the United States. With over 1.5 million active members, they have substantial lobbying power. The association also has a financial investment in promoting the best interests of agents, because if they don't help realtors, members will simply leave during the settlement negotiations. NAR fought to release all members from liability for commission-related claims. The good news is they weren't able to ensure that the majority, more than 1 million of its members, will be included in the settlement release of a liability. This release does not include Home Services of America and its related companies. These are the last corporate defendants still litigating at the Stettler-Burnett case. Changes for buyer's agents. What does this mean? If approved by the court, the settlement means that our industry will see some significant changes in regulations regarding broker compensation. Here's what's standing out right now. Big change number one. The NAR will not allow offers of compensation to buyer's agents to be posted on the MLS. Who will pay the commission will be negotiated off the MLS. With that said, sellers will still be able to offer concessions like covering buyers' closing costs and etc. on the MLS platform. However, commission cannot be on the MLS, but the seller can still pay the buyer's commission. Change number two. NAR will now require a written representation agreement for MLS participants when working with buyers, along with laying out responsibilities and clarifying expectations. This agreement will cover compensation and how much the buyer's agent will be paid, regardless of who pays it. Some very smart buyer agents are already doing this. They have open conversations with their clients about commissions, educating their buyers, showing what differentiates them from other agents, and demonstrating the value they bring to the table. Honestly, people, every single buyer's agent worth their salt should already be doing this. This is meant to protect you. This is actually a good thing after the settlement. It will be mandatory. Now let's talk about how this affects buyers. As I said, it affects veterans the most, those wonderful human beings that serve our country and give their lives for us. The government has programs in place to help veterans buy homes. One benefit of these programs is that they pay less in out-of-pocket expenses. However, one of the VA regulations is that veterans are not allowed to pay any brokerage fees. So this new regulation will make it much harder for these heroes to attain the American dream of home ownership when they're the ones protecting us and keeping us in our homes. According to the Department of Veteran Affairs, lender statistics, 400,692 VA loans were done in the U.S. in 2023. The new regulation will have a major impact on buyers. Another concern about this new regulation is actually that means the compensation for the buyer's agent will potentially fall to the buyer. Under the old rules, the seller side most often paid the buyer agent compensation, even though commission is, was, and always has been negotiable. However, with this new rule where you can't show the compensation on the MLS, how much, and whether the seller is willing to contribute, there's a possibility that buyers may need to cover this cost out of pocket, making their expenses go up. Buyers already face multiple out-of-pocket expenses when purchasing a home. This cost can include, but not limited to, lender fees, the costs associated with the mortgage and loan, the loan origination fees, credit report fees, and appraisal fees. There's also title and escrow fees, fees for the title search, the title insurance, and escrow services, and many more fees in there also. Prepaid expenses. There's fees they have to come up with at close of escrow, such as property taxes, homeowners insurance, and possibly private mortgage insurance, PMI, or homeowners association dues prorated to the time of purchase. There's also an inspection cost, which can include general home inspections, pest inspections, roof inspections, and specialized inspections like well or septic systems. There can also be legal fees in some states and situations where buyers will need to pay for real estate attorney fees depending on the state. Recording fee costs to actually record the deed, the mortgage documents, the appraisal with the local government, transfer taxes, taxes imposed by some states or localities on the transfer of the property. There is so much more. If a buyer is responsible for covering their agent's compensation, it can significantly increase their upfront costs, potentially limiting their purchasing power or even their ability to buy a home at all. This is especially critical for those first-time home buyers or those with limited funds who buy and have trouble coming up with the funds beyond the down payment and the traditional closing costs. According to NAR, in 2023, first-time home buyers represented 32% of the market. That's nearly 1/3 of all sales, and first-time home buyers are more likely to have limited funds. Now let's talk about how this affects the sellers. Of course, this isn't going to just affect buyers. It also affects sellers and the broader real estate market. If buyers have more out-of-pocket expenses, the pool of eligible buyers will shrink, which in turn will reduce the demand for homes, which will affect the sellers. Decreased demands usually leads to longer selling times and lower selling prices. Sellers will have more trouble selling their homes, most likely with more favored terms, and they may not even be able to sell at all. This is important, and think about it. No one is going to work for free. A buyer's agent isn't going to take all the responsibilities, all the liability, representing a buyer without being paid. My marketing of my listings is outstanding, and we expose each home to hundreds of thousands of people, both locally and out of the area. Statistically speaking, according to Bankrate, dual agency, which is when the listing agent represents both the buyer and the seller, only happens about 5 to 6% of the time. That means that listing agents have to cooperate with buyer agents to actually get the home sold, and that's about 94 to 95% of the time. You're going to have to deal with the buyer's agent, and somebody's going to have to pay them, whether it's the buyer or the seller. It's also important to know that in 2021, according to NAR, a FSBO, which is a for sale by owner or a seller representing themselves to try to save money, actually sold on average for $95,000 less. Now, in my experience, when I've seen people doing this, they don't know what they're doing and they lose money. Also, according to Orchid.com, in 2022, the median price for a seller without representation was $310,000. With an agent, the median price was $405,000. Again, that's a $95,000 difference in the negative without representation. Now, let's talk about the implications on the broader market and who else is actually affected. The active real estate market supports a wide network of professionals and services. A ton of people are involved in the real estate transaction. Real estate plays a huge role in the world's economy, being worth more than all the stocks and bonds combined. The real estate industry actually accounts for 18 to 20% of the entire global economy. Just like the strikes in Hollywood affected literally thousands of professionals and businesses, when the real estate industry stalls, huge chunks of the economy takes a hit. For example, home inspectors, appraisal services, repair and renovation specialists, title and escrow companies, loan officers, and mortgage brokers, legal professionals, especially in state situations that require legal representation, home warranty companies, various inspections and specialists like pests, radon, septic, well, and report and disclosure companies, and insurance companies. Here's the deal. I can go on and on. Each of these services play a crucial role in any real estate transaction, and agents manage all of these parties, which is a lot of responsibility. Your transactions, meaning less demand for these services, has a negative impact on their businesses, which in turn affects the local economy and ultimately the global economy. The new regulation regarding how buyer agent compensation is handled are actually designed to add transparency and fairness, but they also cause some potential problems that we all need to be aware of and what you need to do as a buyer's agent. Like I said, things are changing and things are always going to change. Your job is to A, make sure your buyers understand the value that you're bringing to the table, and B, make sure that you bring exceptional value by honoring your skills and being the best darn buyer's agent you can actually be. You need to be confident when you present the written broker agreement and not shy away from discussions about your compensation. They need to understand it. Make sure they understand who is paying for what. Communicate about the value you deliver to your buyers. You also need to learn to be a collaborative negotiator and someone who is a better negotiator on behalf of your buyers. You need to become known as a great problem solver who can keep a deal alive when it hits a bump in the road. If you're doing your job properly, you are worth the compensation and you'll be paid more. Plus, you need to showcase your unique abilities, your expertise, and your knowledge long before someone needs your services. You need to start marketing and creating content and educating people and being helpful to your community so that you become a sought-after agent for both buyers and sellers. You need to build a reputation of high integrity and professionalism so that agents are thrilled to work with you. You need to show why they should choose you. I put together a short piece called A Buyer's Guide to Buying Your Perfect Home. In it, I talk about several of the many benefits a great buyer's agent can bring. Here's a quick answer. I put together a really good video showing you how, as an agent, you can actually speak directly to buyers to showcase your compensation. Click the link somewhere on this page and hopefully you'll be able to see it. OMG, that was a lot of information, but I wanted to make sure that I said everything the correct way when it comes to the commission, the laws, fair housing, and all that great stuff. So this is how you can apply it, right? Don't be scared. It's just change. We change all the time. There's really only 2 changes that's taking place, and here's what you need to know. Things are going to get better, so don't stress. Educate yourself, differentiate yourself, add more value, and start marketing. I'm Shawana Turner. Like and subscribe, and I'll see you soon. Thanks so much for watching my video. You can learn more about how to become a successful real estate professional by watching other videos that I have. And be sure to subscribe to my channel. And as always, every day is a great day to buy and sell real estate.